Welcome to the WAM Founders Fund, our webinar that we're hosting today. With you, you've got myself, Oscar Oberg, and to my right, you've got Tobias, and we're the fund managers or the portfolio managers for the 4 small cap funds that we manage here at Wilson Asset Management. So in terms of how today's webinar will go, I'll just give a quick introduction and a history of how this fund came about and I guess our reasons for setting it up and the opportunities that we see not only for the fund, but for the wider business. And then I'll pass it over to Tobias, who'll go over the presentation, and then we'll open up the audience or open up for question and answers. So us, like many other fund managers, every time we have a reporting season, and we'll do it this year again after the February reporting season, we'll catch up. And over the last few years, and Tobias and I have been portfolio managers for the small cap products for just on 7 years now, and we've always done this probably 2 or 3 times a year. Catch up, have a bite to eat, and then we go through our best performers, and then we go through our worst performers. And what was key is that, and it was a consistent theme that it has been occurring for some time, was that our best performers were founder-led businesses, and our worst performers were either non-founder-led businesses or businesses where there was a founder and the founder had sold a significant parcel or significant amount of shares. And so with that in mind, Tobias came up with the idea about 18 to 24 months ago around us setting up effectively a founders only product where we only invest in founder-led companies. And, I'm on the management team at Wilson Asset Management, and I said to Tobias, why don't you do a mock portfolio for a period of a year? And we did that. And then around October of last year, we presented to the management team and obviously Geoff. And, in typical Wilson Asset Management fashion and Geoff fashion, was like, right, this is a great idea. Let's give it a crack. So that was the origins of the fund. And then the second reason why we started the fund was, over the last 25 years, since we've been around, Wilson Asset Management's developed quite a lot of great relationships across the market. And, certainly that's something that us as a team today, we're constantly, really focused on. And, it wasn't just our generation of running the funds. It was Chris and Martin, Matthew, Kim and Geoff before us. So we've just got a huge amount of industry contacts, whether it be from listed companies that have been acquired, or even unlisted companies over the years. And through this period, we've had a number of these people come to us and say, hey, we'd love to give you some money. We like the way you invest. We like the way you do things. But what became apparent when we had these conversations with a lot of the company founders, they didn't necessarily have the same, I guess, agenda or investment horizon as a standard listed investment company shareholder. They really wanted to put their money in at net tangible assets. And if they wanted to redeem at some point, they wanted to get net tangible assets. And that's one of the reasons why we've opted to do effectively a managed trust. And the other reason as well is that a number of the company founders that we spoke to prior to launching this, really wanted to focus on capital growth as opposed to fully franked dividends. And that became apparent in a lot of conversations actually across a lot of industries where we'd speak to these company founders and they said, look, Oscar, Tobias, I think my business can grow at 15%. And I think my share price, if that's the case, that should grow at 15%. So we just want a simple product that reflects that. So what you've got now is the Founders Fund product that we've set up. It's very much been, I guess, tailored to what the company founders effectively want. And look, it's fair to say, Tobias and I, we launched, softly sounded out people probably around October, November. We had a certain number in mind in terms of company founders that would come in on the fund. It's fair to say that over the last few months, we've been blown away by the support, and it's actually probably 3 times that number that we initially had thought. So look, we're very, very excited. It is a very different product than the 4 LICs that we manage. It is, as I said before, a managed trust. It's not a listed investment company. It's really focused on capital growth, not fully franked dividends. So it is a different style of investor, and it's certainly a different part of the market that we've been targeting in terms of, I guess, new unit holders to come in on the fund. So look, with that, there's some background of the genesis of the product. I'll now pass to Tobias, who will go through the presentation.
Thanks, Oscar. Look, good afternoon, everyone. Thank you for your time and your interest. If I go through the slide on slide 3, that shows the performance of the WAM microcap investment portfolio and the WAM research investment portfolio, the two LICs that has the most, I guess, similar traits to the WAM Founders Fund. Since inception, we've achieved 15.7% for WAM research and 16.9% for WAM microcap since the inception of these funds. And if you go to the next slide on slide 4, it's the first time we've actually gone back and back tested and did the attribution analysis of all of our positions. And what we found was that founder-led companies, sort of how I classify as founder-led, were about 20% of the holdings. However, they contributed 64% of total portfolio performance, and that's given us a lot of confidence in our ability to obviously pick some of these high-quality founder-led businesses. One of the advantages that we've had over the decade of my 11th year WAM and Oscar's 10th year WAM is the fact that because we have a microcap product and a mid and small cap product, we've been able to go on a journey with many of these founders from when the business was very small. And so over many years, we've met with these founders consistently and got to know them. And we see a lot of similarities between all of the founders in different industries and the drive and they have for their own businesses and the care that they have. And it really resonates with us. It really resonates with Wilson Asset Management. Obviously, WAM was founded by Geoff, and then what we see internally from Geoff and from the entire team, that really resonates with our organization as well. So we see a lot of these high quality businesses in all the industries. When we go to the next slide on slide 5, another reason why we wanted to launch this fund now, it's because we believe, and we've been speaking to a lot of our brokers and investment banks, we believe we're right around the corner of the IPO market really picking up. The last time there was an IPO cycle, we saw a lot of high quality businesses that got listed that were founder led. Founders typically, if it's done right, use the ASX as a way to raise capital to further grow their business. And so we wanted, obviously, to launch the fund now. This gives us an opportunity to actually back some of these founders that's coming to the market. And to be honest, for the benefit of across all of our funds, having a fund as this WAM Founders Fund, and we've already starting to see the benefits, gives us an opportunity to put ourselves forward as a differentiated investor to these high quality funds and hopefully get a better allocation in the more sought after IPOs. Slide 6, you can see that the investment process, it's the same investment process that we have with this one, with all of our funds, which is to find undervalued growth companies with catalysts that could re-rate the share price over the medium, the longer term. So we're not changing what we do. We are sticking to the same process that we've had over many years since the inception of the fund. On slide 7, it talks about our competitive advantages. And obviously, you've probably read a lot about the outperformance of founder-led companies. In our experience over the last decade or so, the secret sauce is the access to many of these founders, the ability to have those frank dialogue with these founders to really understand what drives them, the history of the business, why they think they can achieve, the term I've been using is the North Star over the next few years. And our job as investors is, once we've identified the ultimate longer term goal for these businesses, our job as investors is to go and do a lot of on the ground work to figure out what are the tangible evidence that's showing that this strategy is working and coming to fruition. So, we get the opportunity to meet many of these founders. We hear great stories of some of these founders spending a lot of their time and their effort. So, for example, we've heard founders who flew a long distance flight between London and between the US and London 52 times in a year. That is commitment and obsession to us. We know founders that's absolutely obsessed on data, and every decision has to be made on data. We know founders that make sure when they leave the office on a Friday night and the last one out of the office, they're turning the lights off. So these are all stories that we've heard over the years as we've gotten to know many of these entrepreneurs. And this gives us an insight on the person that they are, and also the manager and the DNA of the organization, because it really starts from the top. And obviously we see that at Wilson Asset Management. When we go to slide 8, when we've spoken to many of the founders and management over the last couple of months, the word that's really resonated with these entrepreneurs is the word obsession. There is this obsession within the organization to achieve the goals. Now, we've heard many great quotes, but we see that obsession here at Wilson Asset Management, both within Geoff and the management team, as well as the entire investment team. I think Oscar and I, we text each other probably 200 times a day on the stock market, throughout the day, different hours. We live and breathe the market. This is what we love, and we're obsessed with the market. And so we see that obsession in all the high quality businesses that's been running. I think we had a really good quote we heard recently from the founder of one of the companies.
It was we're in Perth last week, and we've had some amazing conversations, really, haven't we, over the last 3 months? But this it was a mining company. It was a company we've never really owned in the fund, and they contacted us after they saw that the fund get launched. We had a meeting. It was like 5 o'clock in the afternoon in Perth. We're probably a bit tired and jet lagged, and we asked the founder. We said, "Oh, what's your obsession?" And he goes, "The relentless pursuit of detail," which I thought was a great quote.
Great answer.
We've learned a lot through this process, just in terms of the guys we're meeting.
And it was a really good opportunity to get interviewed by these management and founders, and you learn a lot about them as well and how they think. And we've been we've been overwhelmed with the support, and obviously very impressed with the caliber of investors that's coming into the fund and co-investing with us. On slide 8, there's the big circle called the strong alignment of interest. Now, for us, and we see it in our organization, obviously we have over 130,000 shareholders, and we live and breathe doing the right thing. So it's not just about skin in the game. It's about having that alignment of interest. And we believe, particularly in the small cap space, having that alignment of interest is important to grow the business. So it's a symbiotic relationship between, the founder with a lot of stake, as well as the minority shareholders, such as, the institutional investors, that they need to do the right thing by us, and we'll do the right thing by them. So that is definitely a relationship that we think it's very important, and how we assess these companies as well, and their track record speaks for itself. When we go to the next slide, on slide 9. So the investment strategy, as I mentioned, it's the same strategy. We're looking for longer-term catalysts. The stock is the portfolio stock itself will have 30 to 40 stocks. In general, that's different to the LICs that we have. We have about 110 companies across the 4 LICs. So the fund itself would be more concentrated than our existing LICs, and therefore, the risk is going to be higher, to be completely transparent. And out of the 30 to 40 stocks, or in the new WAM Founders Fund, look, circa 75% of these businesses will be the larger small caps or mid cap companies that really well. That has delivered for us for a very long period of time. But it's a 25% of the fund that we're trying to pick the next high performer, the next small cap that goes, or micro cap that goes into small caps, and then goes into the mid cap index. And if they really succeed, go into the large cap index. So that's the higher risk part of the portfolio, but also the high return part of the fund as well. So we've really constructed this fund as a broad cap. The turnover of this fund is also going to be a lot lower than the LICs. So the LICs turnover is quite high. With this one, the way we're trading it, and the turnover expectation is going to be quite a bit lower than 50%. When you look on the right of this slide on slide 9, that is an output or function of many of the mistakes we've made in the past. Obviously, buying businesses, and it doesn't always work out well for us. So we've put in a few guidelines in there to help us as investors make the best decisions or increase the chances of success So the founder owns more than 10% of a company or $20 million of a company, and that includes many CEOs or management teams that's been there for a very long time, that's really grown the business and have, obviously accrued quite a bit of equity in the business. They think like founders as well, and we didn't want to penalize them. We wanted to include them in the portfolio. Founder has to hold an executive position, so they need to have obviously influence and control on the business itself. And that's really important to us. And the third point, which we've been very upfront with everyone we've spoken to, and this stops us from falling in love with positions. And so if a founder sells more than 25% of his or her holdings over the last 12 months, we will sell out of the stock. And it's just really following the money. We don't mind sell downs. We've done really well out of specific sell downs in the past. I guess it's just the quantity and the timing of the sell downs that we are very wary of. Slide 10 and 11. Slide 10. It's the same investment team that is going to be managing this fund as the 4 small mid-cap strategies. We're going to be investing a substantial amount of our wealth into these strategies, into the strategy as well. So we have a few more slides on stock stories to hopefully give you a flavor of, I guess, some of the outperformers and some mistakes we've seen over the last decade. Afterpay is one you've probably seen us talk about. When they were listed, we were the IPO investors. We invested $4 million of the initial $25 million of the IPO capital raise. And, the founders, Nick Mulder and Eisen, are amazing. They did incredibly well, trailblazing in the buy now, pay later space, both in Australia and also in the US. And while it performed really well for us, what really haunts us is we did take profit along the way, and we have given the outperformance of Afterpay over many years, we did leave a lot on the table. So with this fund, if we hopefully find the next Afterpay or something that's similar, and the founders are obsessed and they're delivering, we wanted this fund to hold onto these positions a little bit longer and sticking to the specific process of this fund.
Yeah, and then on slide 12, you've got Seven Group, which is, we wanted to show that this is a stock that's you wouldn't classify necessarily as a high growth stock by any means. It's an industrial services company. And initially when we bought those shares, almost 10 years ago now, I mean, it was very cheap. And, I remember in when would it have been, Tobias? 2011, 2012, when I was a sell-side analyst, I picked up coverage of Seven Group. And I always remember, did this detailed research report, which would have taken me months. And I came into to present it to everyone on the desk, and I got blasted saying it's the most confusing company of all time. There's no liquidity. There's no interest in the stock. And, to the Seven Group's credit, no doubt, that was the feedback on the market at that point in time. But, led by Ryan Stokes and, obviously one of the best CFOs we see in the market, Richard Richards, I mean, they have done a tremendous job. So, there's been many catalysts over that 10-year journey. They sold Westtrack China. They bought Coates Hire. They bought Boral at the bottom of COVID. They've reduced their debt levels at various points in time. And, we've owned that stock, that whole 10-year journey, and seen it go into the ASX 300, the ASX 200, the ASX 100. Now today, I think it's in the ASX top 50. So it really is a success story, and, shows you what can happen when you back a founder who's got a very consistent strategy.
Thank you. On slide 13, it's probably one of our mistakes. And with this fund, we will continue to make mistakes. And so the company was Atomos. We had a very large position in the fund at the time. I think they've upgraded a few times. It was a founder-led business. Now, one of the mistake we made was when the founder sold out of the position and exited the business. We didn't sell out. We should have. And the share price subsequently fell by, I think, from 80 cents to 20 cents. And that's around when we sold out. And so when there is an incident where there's an aggressive amount of selling by the founder, and clearly they know the business a lot better than us, we needed to obviously review the thesis for us. And this is in addition to all the industry work and the company work and the modeling that we do. But, this is usually a red flag for us. And so, in that case, we made the mistake and lost, money. Continue to hold this position. So, obviously, if this occurred again, then we will be selling out of this fund straight away.
I think it's fair to say that was a scar that we've.
That was a scar.
Painful.
we don't remember. We don't forget. So these are scars of the last 16 years that we've been running or been in the market, and we go back to every single one of these examples to try to learn from them. And finally, on slide 14, Tobias Limited. You've probably heard us talk about this quite a bit over the last 3 years. It's our largest position and the one we've followed. So for Tobias, Oscar and I, we've visited Singapore to do work, meeting the industry competitors, and we've done a lot of work over the last 3 years to give us that conviction. For many of these founder-led businesses, you start off with initial position, you have conviction in the founder and the strategy. As the strategy comes to fruition, we're adding to the position as our conviction level goes up. And it's usually on the back of them delivering or hitting the hurdles they've set themselves the goals. So to us is an example of a company that we have held on, and we've kept holding on. It's delivered a lot for us in terms of performance across all of the funds. And finally, on slide 15, it's an example of many of the companies that we've backed over the last decade. And so for us, we see a lot of similarities between the founders, between the high-performing management teams of these businesses. And we just want to be able to find, the new founder that's going to come into the micro, small cap space that can take the business to a much larger size. And maybe just to finish off again, thank you so much for your interest. There's a lot of synergies with our launching this fund with our existing LICs. Over the last few weeks, we've been on the road talking to financial advisors, new investors into the LIC space to not only talk about this fund, but also promote the listed investment companies that we have, and having those dialogues. At the same time, having this fund will help us with allocations with sought after IPOs that are founder led, that would benefit across all of our funds as well. So thank you very much for your time, and looking forward to answering your questions.
Thanks very much, Tobias, and thanks for running through that. It's very exciting. We'll kick off with a few of the questions that have come through prior to the call. The first one is on if there is a minimum investment in the fund.
Yep, the minimum investment is $10,000.
Beautiful, thank you. And this one is from Kathy and Margaret. Will the launch of this fund affect the performance of WAM Capital, WAM Microcap, WAM Research and WAM Active? And does this mean split responsibilities?
No, the answer is no, we don't think so. It'll be the same team that's going to be managing all the strategies. The reason why we don't think it would affect the performance of our LICs is because we are targeting a different group of investors. We're actually promoting to this different group of investors with different risk profiles and the focus on capital growth rather than fully franked dividends. As an example, we believe this fund will benefit all of the LICs from an access perspective, to management, to founders, to industry, and also a better allocation of IPO once the IPO market really kicks off. So we think there are a lot of positive synergies that's going to help us be better stock pickers.
So as an example, we formally launched last week on Monday, and we've had 5 or 6 random emails, I guess you'd call it, from past management teams or past CEOs we used to deal with who might be a chairman or a director of a very small company, wanting to catch up, saying it's a founder-led company. There was a few companies we'd never even heard of before. So this is, as Geoff always says, the best information wins in this game. And, certainly, we've been surprised at how, we think there's tremendous synergies with the existing products.
Fantastic. And Tobias, you touched on this one earlier in your presentation, but just in case this person didn't catch that, how many companies will be held in the portfolio?
Typically, it's going to be 30 to 40 stocks in the fund.
Beautiful. And will investors be receiving dividends, and will they be fully franked?
It's going to, because it's a trust structure, it's not a LIC, it's going to be distributions. The distributions are going to be volatile every year. And the distributions would be a function of, the capital gains and the capital losses that nets out every year. And there'll be no franking credits.
Beautiful, thank you. That leads in well to this next question from Kathy. Why are you doing a unit trust rather than doing a LIC?
So when we did sounding out the company founders that we wanted to participate in the fund, and that was who we started with, and we created this fund to suit their needs. They largely had minimal interest with fully franked dividends. It was all about capital growth. So certainly doing it as a unit trust was the best sort of avenue for that. And that's why we chose that space.
Fantastic. And the next question is, could we see this model expanding internationally, or is the focus purely on the local Australian market?
Look, from our focus, it's purely on the Australian market. That's what we're good at. We'll also focus on New Zealand, so largely focusing on industrial companies within Australia and New Zealand, given that's our specialty, let's call it, across the 4 LICs. So we're not really changing anything or how we invest at all with this fund.
Fantastic. The next question is, what has been the response from company founders? Are they interested in the fund?
It's
been very good. We've been very overwhelmed. Very, very grateful with all the support we've had so far. We're getting emails every day, and so we've been very, very happy with the support so far.
It's surpassed our expectations by far.
Yeah, it's very exciting. And the next question: how has Geoff's influence shaped your decision to back founder-led businesses? Touched on this earlier before, but
it's a really good question. I mean, Oscar and I have both been in WAM for more than a decade, so we see it firsthand. So a lot of the similarities, and obviously Geoff has grown the business of Wilson Asset Management over the last decade as well. And so the focus and the DNA of the organization influences the way we look at other companies, and so that's really helped, to be honest, and it's really resonated with the founders of many of the companies that we invest in as well.
Fantastic. And then just the next one's on interest rate cuts. Do you see potential interest rate cuts strengthening your investment thesis?
Look, I think what we've learnt over the years, particularly in the last 3.5 years, it's been a tough market for small caps. However, we don't make excuses over here, and we definitely we think there's always opportunities. There's always stocks every year that will go up 2, 3, 4, 5 times. One of our best holdings, Generation Development Group, as an example, there was a period where we held it for 6 years, did nothing. In the last 2 years, I think it's gone up by 6 times or something. So, look, there's no excuses. We think in the part of the space where we do have a competitive advantage, where there's a lack of competition, is in that sort of small and micro cap space, and and less than, call it 500 mil in market cap. And that there will be a number of stocks in the fund that will be from that space. Look, we ultimately want this fund to cash in on their performance. So look, but no doubt lower interest rates would be fantastic for small and micro cap companies. Small and micro cap companies have underperformed large caps, I think, for 4 years now. So it's a big long amount of time. You only have to look at Commonwealth Bank today as an example of that, which shows you. So, look, we think the catalyst will be lower interest rates for small caps outperform. We've seen that in the United States. We've seen it in New Zealand. We think Australia will be the same. And certainly our house view is that, that will occur. It might be in February. If it's not February, we think it's coming March, April. But we're not going to make excuses here. We are very confident on this product, irrespective of whether interest rates fall or not.
Fantastic. And will you be purely focusing on the small to mid cap space?
That's correct, with a focus. But we're also going to be looking for, obviously specific micro cap opportunities. So it's going to be a broad cap across the spectrum in terms of size.
Fantastic. And you've expressed confidence in a rise in IPO activity over the last 5 years. What's driving that belief, and how will it benefit the fund?
There's a lot of negativity on IPOs at the moment, but the reality is actually the ones from last year have all done pretty well. Most of them traded poorly in the first month or two, but they're actually well above issue. So that's companies like Tasmea, Simul, Redox as an example. everyone knows about Guzman and Gomez and how well that's done. So look, we don't think the market's there, and I guess for us, we've and this has been consistent for over this last 3 or 4 years. We've been fortunate enough across the portfolio to have probably the most amount of takeovers that we've had for a very long time each year, and that's a function of the small cap market being so cheap. I mean, we had SG Fleet, again, a founder-led business that got taken over at the end of November. And 2 weeks ago, we had a technology company called Dropsuite, which would have featured prominently in this fund, actually. Get a 35% premium, and they got taken over as well. So, look, these companies need replacing. And, certainly, I was skiing in Japan with my family about 2 weeks ago, and I don't think my wife was a bit angry with me because I was just getting call after call after call after call from investment bankers wanting to chat on this great pipeline of IPOs coming. So we just think we just need the first one to go and to do well. And I think we will see, quite a few after that because the market needs it. There's no question. And we think it's cyclical. Well, it'll come back. It's a great place for these companies, the ASX.
Agreed.
Fantastic. This is a really good question, the next one. What's your long-term vision for the fund and where do you see it in 5 or 10 years?
Yeah, it's a really good question. Look, like all of our strategies, our vision for the fund is performance, is to maximize the performance of the fund. In terms of this fund, we're hoping as part of backing some of the earlier founders that we will be able to pick the next stock that really, does really, really well. And we want to, we're backing ourselves to find these hidden gems, so to speak, and backing these founders from when they're much smaller and where we're seeing that inflection point or the catalyst occurring. So that is a longer term vision for us.
Great. And the next question is on, are there any specific sectors or industries where you see the most opportunity for founder-led businesses?
I think, as you said before, the portfolio will be a mix between growth and we'll call it high valuation stocks and low valuation stocks or value stocks. I wouldn't say there's a particular industry as such. I mean, I would say that probably the two industries where you like to see founder-led companies, I would say would be the technology industry. Reason being, a lot of these companies trade on very high valuations, and the reason why they do is there's a very ambitious long-term target for a lot of these companies in terms of sales and earnings. And so when the founder sells, that's usually a negative sign as to whether they believe that or not. And the second reason, I would say the construction industry, like civil engineering companies as an example, because if they're founder-led, chances are they're not going to underprice and take on a fixed price contract they eventually lose a lot of money on. So, I mean, that would be my two sectors to us. I don't know, but I would say we're agnostic to sectors, really. It doesn't really.
I mean, we're really trying to pick the winners in the different sectors, figuring out how the industry is structured. So as an example, if we see companies that's navigated the last 5 years, with the trade war, with COVID, post-COVID, interest rates, increasing cost, et cetera, and they've come out over the last 6 or 7 years, winning market share, that's a really good business model. That's a really good management team. And so we are very specific about the types of companies we like and types of personalities and management that we like. So we won't dismiss the industries, and we will look for opportunities in every sector.
Great. Thanks, Tobias. And just quickly, midway through Q&A, we're having a lot of people writing in saying that they're really interested. Can you quickly share the easiest way for listeners to invest?
Oh, well, to go on. Thanks very much for obviously your interest. I'm obviously grateful for you to join the journey. I mean, it's just simple. It's to go on our website, and there will be a link which will take you to Boardroom as a retail investor. And the minimum investment, as we said earlier, is $10,000.
Fantastic. And we will be sending a link around to all the viewers after the webinar as well. So to continue with Q&A, the next one's from Colin, but a similar question from John. You say it's a restricted sized fund. What does this mean? And the management fees seem high compared to other ETF fees. Why is this?
Okay, so why is it a small fund? It's a very bespoke fund. It's very unique. The feedback we're getting is that, there probably isn't a fund like this really in the domestic market, that it's only in the Australian market that's focused solely on founder-led companies. I think, potentially we could have done a lick if we wanted to and raised more money if we wanted to. But look, we want to really get the right investors into the product, and we feel we've done that because we've contacted a lot of the company founders and CEOs. So we don't want it to be too big. And as Tobias said, we want this fund to really participate in the next IPO cycle. A lot of these companies that come to IPO are very small companies. So effectively, if we're taking a concentrated position in these companies, say like 5 or 6% of the company on day one, we want it to be a meaningful weighting of the fund, and so that investors can fully participate in the upside as it grows over time. One of the great examples I think was Afterpay is, we took $4 million of the $25 million IPO. So, we will see an Afterpay or a WiseTech or a Pro Medicus in the next 3 or 4 years. And certainly, with this fund, effectively, as Tobias was saying, if, as long as the catalysts all align and the North Star, as Tobias calls it, is maintained, and the founder invests alongside us and doesn't sell too much stock, then we'll hold the stock and we'll maximise the upside. Fees. So the fees are no different from all of our Wilson Asset Management funds. We're an active fund manager. And again, with ETFs and, obviously are generally lower in fee versus active fund managers. I guess, as investors, you need to make a decision which sort of style of investing suits you. So, as I said, I heard Geoff say numerous times on calls and presentations, there's a place for both types of funds in a portfolio, in his view. So how about I leave it at that?
Thanks, Oscar. The next one's from Peter. You touched on it before, but he's saying, how can our self-managed super fund apply?
Yeah, so obviously, Petty, as we said, you'll get an email from our corporate affairs team. But obviously, if you go to the website, also on Boardroom's website as well, you'll be there's a link there, and you can follow the prompts and apply there.
Beautiful. And the next question from Bernie: why can't these great investment opportunities be added to or increased within the existing funds? And you touched on this, Oscar, but just in case he's joined late.
So they can be. I mean, a lot of these companies, the vast majority of the companies we already own. But again, for different investors, our listed investment companies suit, and for other investors might prefer a unit trust. And certainly, as Tobias said before, in the listed investment companies, we do trade a lot. And that gives us the ability to pay fully franked dividends. This fund won't trade as much, and will be really focused on capital growth. So again, it's, as a potential investor, you've got to look at sort of your personal needs and background and so forth, and whether the investment suits you. And I guess on the comment on the other funds, we think this will be huge for the other funds. It'll be massive positive in terms of the synergies, and we've already seen in the last few weeks. We think we'll get better access with the companies that we own in the fund. We think companies will approach us because they want us in the fund, and we think that we'll get better IPO allocations, which obviously helps the other funds as well. So do we run the risk of having too many products? We don't think so, because there's a lot of investors out there that simply don't like listed investment companies. And they might be advisors, financial planners, they might be high net worth people, they might be family offices. And, that's effectively who we've been targeting here. And, it's not like the business has put out a huge broadcast, a massive email to all our 130,000 shareholders. So we've been very, very targeted. And certainly the last thing we want to do is to impact the share prices of our listed investment companies.
Fantastic. And the next one's from Sean. Will you be allocating funds to unlisted opportunities?
We won't be. So this is not a pre-IPO fund. So the investments would just be listed companies.
Fantastic. And the next one's from Peter. He said, why is the performance fee benchmark not the ASX 200 or Small Ords? If interest rates dropped to 2%, does that mean that you would charge a performance fee for anything over 6%? Is this a low benchmark?
So the benchmark won't be for everyone. And, you know, as I said earlier, we constructed this fund to be what we call founder friendly. And, you know, when we spoke to a lot of CEOs and CFOs, you know, their frustration, I'd say, with the Australian market was fund managers and stockbrokers, et cetera, were too short-term in nature, and all they really cared about their relative performance versus the market. Now, we created this benchmark to be an absolute return-focused fund, and that's what we're targeting here. And that was the benchmark that we created effectively, which, you know, I think
with a high watermark.
With a high watermark, we won't take a performance fee in a negative market. So yeah, it is what it is, and you know, we're going to hide behind it. But you know, if it might not be for particularly investors, but you know, certainly the founders we spoke to, they quite like it because you know it's focused on generating consistent absolute returns.
Yeah, and I think it's based on your view on the interest rates as well. Obviously, if the interest rate falls by 4%, it can also rise. But if interest rate falls by 4%, hopefully the equity market, reflects the upside with that as well.
Great, thank you. And the next one's from Mahavir. He says, "What is the fund's target amount to collect, and by when? And when will you start investing?"
Yeah, so we start investing on the 1st of March. In terms of the target fund, I think we're looking to soft close at $300 million. But we will go live on the 1st of March, regardless of the amount of fund raised.
Great. And does the fund have a target for the annual distribution?
It doesn't. So the distribution, and this is the difference with all the LICs, the distribution is going to be volatile and depends on the the performance of the fund every year, and depends on, I guess, the netting off of the crystallized capital gains and capital losses, and obviously the dividends that's passed through. So the distribution, it's going to be volatile, and it's not going to, and
it's going to be lower, a lot lower.
Yes,
lot lower. Can't emphasize that enough versus the other listed investment companies.
Great. And from Mike, will you be investing in overseas companies? You've touched on predominantly Australian.
No.
Yeah.
No, so it's going to be Australia and New Zealand. It's our sort of track record and the network that we've built, and I guess the what we're comfortable investing in. So that's so we're not going to be investing in overseas companies.
Brilliant. From Dennis, what is the benefit of investing now versus waiting for the fund to mature and show growth and distributions in a couple of years?
It's an open-ended structure, monthly liquidity. You can do both. You can invest now.
That to me sounded like someone. It felt like that's a question for an IPO of a listed investment company.
Yeah.
You can't. The growth in distributions. Obviously, we'd like to deliver distributions as much as we can, but it is really dependent on the market and how much we're buying and selling, and whether we're making profits on that buying and selling. So it will vary massively. It'll be, it could be really high one year and it could be nothing the year after. It's a very different product, unit trust versus a listed investment company, where you have the ability to smooth your dividends through market cycles. So it's a completely different product, and realistically, it's not a product you should be relying on for income.
Yes,
it's for capital growth.
Great. And the next one's from Saranjit. How are you differentiating the Founders Fund from WAM Microcap?
Yep. So the Founders Fund will have a big part of the portfolio that's in larger companies, larger small caps, and mid cap companies. So that'll be the difference.
There will be quite a bit of crossover, though. There's no question.
Yeah, fantastic. We're having a fair few companies come through, so I might just list a few companies off Oscar and Tobias to see if these companies fit your investment thesis. The first one that's come through is Technology One. Would you be investing in that company?
Yes. Well, it will fit our investable universe. Yes.
Great. WiseTech?
Yes.
Premier Investments?
Yes.
Yep. Harvey Norman?
Yes.
Reese.
Yes.
Yes.
Yep. News Corp.
Yes.
Yes.
One you're considering. Minres.
Yes.
Brilliant. Fortescue.
Yes. But just
Yep.
remember, I'd say that's a stock, and same with MinRes, is a stock that's not necessarily our expertise, but technically, yes, we could invest in that.
Yeah.
But, certainly over our time at Wilson Asset Management, we've never been in Fortescue. That's a large cap company, a large cap iron ore company, obviously, which is more in the domain of WAM leaders. But technically, yes, we could invest in Fortescue.
Yeah. Our focus continues to be with our other funds on industrial companies.
Brilliant. And Develop Global. That's the last one.
Yes. And yes. And that's a company we own in WAM Microcap. Yep.
Great. Okay, the next question is from Michael. If a founder resigns or retires and sells the majority of their shares, would that prompt an exit or a sell down?
Great question. Look, there's always exceptions to the rule, and we are going to be very open with companies when we see them. That if they are in this fund, we will say, hey, if you sell over 25%, 99 times out of 100, we're going to sell. Now, there's always exceptions to the rule. Like an example was a healthcare company that we own. The founder about 6 months ago sold stock, and the reason why they sold stock was there's a few personal kind of health issues, let's call it. And so that was completely fair enough and understandable. So it's up to us to have a very good relationship with the company, have a very good relationship with the board, and understand sort of the reasons. And if you look over our history, we've done quite well out of founder sell downs. Like Pro Medicus, for instance, has consistently sold down shares every year, for a number of years. Technology One, the founders used to do that too. Afterpay, I think we made money on every single sell down that they did, except for the last one. So look, it's a case by case basis. But what we're trying to remove, and particularly if we go into the next IPO cycle where we'll see really small companies come through, is the behaviour when effectively companies just list on the IPO and their sole reason to list on the IPO is to get a higher share price to sell. What we want to see is companies really, or management teams, in there for the long haul with a long-term vision, which effectively we want to be on the journey with them.
Great. And the next question, is your investment process quite fluid? Would you be investing in manufacturing, technology, building, construction, all at the same time?
Yes. So it's a bottom-up strategy, as you know, with all of our LICs as well. We model the business. We try to work out what the target price is, obviously identifying what is the catalyst and within what time frame. And so all of that comes into making the investment decision. And, ultimately it's just our view on whether, we believe the share price will go up. So based on the catalyst. So yeah, we would look at everything.
Brilliant. And the next one's from John. If during the whole of the period of my investment, the fund has underperformed against the benchmark, is the accrual reversal upon redemption? The whole
sorry, don't really. We'd love sort of clarifications on that question. We would, if it's possible, we'll give you a call just to understand the question.
Yep, definitely. We can give John a call.
Well, the thing is, it's the same as all our other funds, so there's no difference. But yeah, it's a technical question. I think probably best if we get back to you personally.
Yep, definitely. The next question's from Peter. Is there a maximum where you'll stop taking new applications?
Yeah, so the current plan is to perhaps, this is sort of what we're looking at now, is to soft close at $300 million. But, obviously we want to be able to run the fund and see how the strategy scales as well. And that could potentially change.
Great. And from George, how many founder-led companies are in your investable universe, approximately?
Yeah, so in terms of our definition of a founder-led company, so it's either founder or CEO that owns either 10% of the company or $20 million in stock or effective equity. And you had to go back individually and look at the ASX 500. We've identified about just over 120 companies that fits that the definition. Obviously, there's a lot of companies that's outside of the All Ords or the top 500, but we also have a lot of stocks listed under NZX, and obviously a lot of companies that's looking to IPO over the next few years. So hopefully that gives you a flavor of the investable universe.
Great. And another one from Peter. Will we be updated on the companies that the fund is invested in? And if yes, how often?
So there will be a monthly report that goes out, very similar to all of our existing LICs, where we provide some color on the position sizing and then the commentary on the stocks that we have in the fund.
But given it's look, we're working through that now. It will look different from the monthly reports that you see coming through on the ASX and listed investment companies. And given it's a more concentrated fund, I think it's fair to say that, there'll probably be a little bit more in depth in terms of how we talk about the companies, given we're taking quite a very long-term view on the company. And so it's sort of a different approach, let's call it, than perhaps what you see with the the WAM and the WMI updates that you see every month.
Fantastic. And will the fund be covered at your national shareholder presentations like the LICs are?
Yes, but again, it's working through that at the moment. But yes, it will be. Yes.
Great. And from Todd, can you invest at any time, or do you need to be in from day one? This is from our perspective, or as a unit holder? I think it's as a unit holder.
Unit holder, yeah.
Yes, you can invest. It's open-ended trust. So, and we're obviously pushing hard for the first round for the end of February. But, if you want to watch us and see how we go, then, you can always put money in. And that's the difference, I guess, for open-ended trust versus closed-end listed investment company.
Great. The next one's from David. How can you assess the moral and ethical values of founders, and does it really matter?
Oh, great question.
It does matter because it matters for us internally how we run, or how Geoff runs Wilson Asset Management. So it matters to the people that we choose to partner with, or the companies that we choose to partner with over the long term. And, we're patient capital here in this fund, and, we want, and a lot of the co-investors are patient capital as well. So for us, that does matter. And in terms of assessing that, it's pretty much either track record that they've had in the past and the conversations and the relationships that we've built over the last few years, and then that we sort of build up that trust both ways.
Great. And from Margaret, have you asked the age of the founders and what their succession plans are?
We will be, absolutely. It's a high bar for companies to get in this portfolio, and we want to understand the generation below. And these founders at some point will retire, and it's probably worth noting that a good example is a company called Mainfreight New Zealand, where the founder's quite old and the CEO actually owns $300 million of the company, I think.
He's been there since 1994.
Been there since 1994. Has founder values, lives and breathes the business. Like we classify that as a founder-led company too. So yes, it's extremely important we understand the bench strength of the company.
And that's consistent with how we look at all the LICs already, like in terms of when we assess the companies that we have in the fund. We often not only just meet the CEO or CFO, but they would introduce, whether it's investor days or visiting their offices, introduce many of the other senior managers in their organizations.
Fantastic. And the next one's from Sean. How long will it take for the new fund to be fully invested?
Should be fully invested on the 1st of March.
Fantastic. And Rodney has said, congratulations, this product will do well. What hard rules do you have on selling a position, and will you invest in mining?
Thanks, Rodney. As we said earlier, so the hard rule is the share ownership from the founder, but certainly there are exceptions to that rule. So, it's up to us to get very close to the management team and the board to understand the reasons why. Mining, it's not our sweet spot. However, again, there's exceptions to the rule. So, we have invested in the mineral resources before. Develop Group we own in the microcap portfolio. Mostly we tend to focus on mining services, and a lot of those mining services are founder-led companies. But hey, we'll never say never. And certainly, Emerald Resources is a company that we own in the research part of the portfolio of WAM, which has done incredibly well. We know that stock very well. So never say never, but I'd say the vast majority of companies will be industrial companies.
And I think that's worked well for us over the 10 years we've been at WAM, having that flexibility to I guess make those decisions and to not have limiters of ideas. So I think there's a lot of ideas out there. So we just want to be able to objectively assess each of these ideas.
Fantastic. And Jim is saying, can you please comment on the liquidity of the fund?
Yep. So the liquidity of the fund is going to be monthly liquidity in terms of, I'm guessing the questions around as an investor. Rather than a LICS, which is daily liquidity with this fund, you'll have to apply, or if it's applications or redemptions happen every month. And so the liquidity of the fund itself is monthly. The liquidity of the holdings or the stocks within the fund it's pretty liquid because we're obviously holding all listed companies, and many of them are very large companies. So that's hopefully that answered your question.
Definitely. And from Debbie and James, they had a similar question. Would you invest in Sigma Healthcare?
Yes.
Great. From Alan, if a guideline is to sell when a founder sells down, should we exit the founder's fund if either Tobias or Oscar depart WAM?
That's a good question.
Great question. That's completely up to you as a unit holder, I guess.
Yeah.
Yep. And given sort of we were the ones that came up with the product ourselves, or should I say Tobias? Geez, and I'm taking your glory, mate.
No,
I guess if we disappeared, then I guess, that's a decision you would have to make as an investor. All I can say is that, you see us at every call and every roadshow, but there is a great team underneath us who would probably do a better job than us. If we got hit by a bus.
Yeah. So, and I don't want to jinx myself, but, we love what we do. And we come in every day. Investing is our passion. And so it is rare where you go into work every day and you're very happy and you're doing exactly what you love with a bunch of the entire team that's super supportive and that are friends with you. So, that's what drives us as investors and why we've been at WAM for over a decade.
I'll tell you one thing that's going to keep us, as shareholders at Wilson Asset Management, we think about them every second of every day. This is going to a new market where we're dealing with a lot of the CEOs and CFOs and boards and founders that we've been dealing with a long time in the market. And, they've been kind enough and back us to give us their own money. That these guys have been very successful in business and they're going to expect a lot from us.
Yep.
And we don't take that for granted. So, clearly if we launched a fund and then within 12 months one of us leaves or we both leave or whatever, then they're not going to be happy, as you guys would be either. So, no, we're here for the long term and, as I said, we're stoked and very excited about this product.
Thanks. The next question is from Geoff. Are distributions annual or biannual?
Distributions are annual.
Great. And would the fund invest into us at the current price?
You'll have to find out when we launch the fund.
I think you know that answer to the question before you asked it.
Beautiful. From Steve, will performance figures net of fees be provided on an ongoing basis?
Look, we're working through that. I think we'll be consistent with the other WAM funds at this stage. But look, again, this is a unique product. We will take feedback and make a call. But we're working through it at the moment. I would say, look, it's something, to be frank, we haven't probably talked about as a team as yet because it's been mad trying to get the whole process underway. But I'd say at this stage, we'd probably quote gross of fees like we do with all the funds.
Brilliant. And another one from Rodney. Are there any sectors in your process excluded?
No.
Great. And from Amy, please explain how the performance bonus would work.
The performance fee, I assume.
Yep.
So the benchmark we've got is the RBA cash rate plus 4%. And there's a high watermark. So, for instance, if the portfolio does 15% in a year, and let's call it, when you count for management fees, the benchmark is 10%. We effectively take a 20% performance fee of that 5%, which is the 15 minus 10. Now, if we get a situation where the portfolio is negative 5% and the market is negative 10%, so we've outperformed by 5% there, we don't take a performance fee. The performance has to be positive, which is the feedback that we got a lot from the company founders. They didn't want us taking a performance fee in a negative market, and which is completely understandable given the way we structured this fund.
And I think another scenario is if the fund's flat, we won't take a performance fee because the hurdle is therefore close to that 10%. And so for next year, we will have to make back that first 10%, as well as the new sort of circa 10%, or 9% and a bit, to be able to take a performance fee before we can take a performance fee, if that makes any sense. So that positive benchmark compounds every year, and so the performance of the fund needs to be higher of that compounded positive annual benchmark for us to get a performance fee.
Yep, that makes sense. From Sean, how much of the fund will come from founders and CEOs?
Good question. Look, we don't know is the answer, because
they're still going through the application
forms.
So we can't sort of comment on that right now.
We can't really, but it's material. It's material. Yeah, it's more than we thought.
Great. And from Michael, would the fund invest in DDR?
Yes, that's part of the investable universe. Yes.
Fantastic. And how is the unit price calculated from 1 March? We have a question. If I invest 10K, how many shares in the fund would I receive?
For that 10K, and again, we don't assuming the unit price is $1, then effectively, you get 10,000 units.
Yeah.
And then at the end of every month, if the market goes up, if our portfolio goes up 10%, then that $1 worth of units will go up 10% effectively, and you'll receive that every month. When we get those reports.
Yeah, I think the difference with the LICs would be that the NTA would be where you get in, and then it's also where you get out, like when you redeem the money as well. So it doesn't trade at a premium or discount because it's not a listed product.
So and then again, that's one of the, I guess, the disadvantages, let's call it, of a trust, is that you're only really seeing the unit price, let's call it, once a month.
Yeah.
Whereas, every day in the share market, you can look at the share price of the listed investment company.
Yes.
And you can get call it instant liquidity if you want to sell. So there is a holding period in terms of for you to get your cash back, but that's the way a trust works.
Yep.
And so again, you've just got to weigh that up in terms of what your expectations are and your time horizon and your investment objectives are, as to whether the product suits you.
Yep. And it doesn't give you the opportunity, for example, when LICs are trading at a discount, to buy shares at a discount to the NTA, or sell shares at a premium to the NTA. So it doesn't give you that opportunity, which, as we know, is the benefit of the LIC structure.
Thank you. And this next question is from Hamish. He says, what is the top founder-led stock pick currently from each of you?
Oh, good question. I'll start. So there are a lot of founder-led stocks that have done incredibly well over the period. And so the challenge for us in this fund is not to put all of the fund into a Pro Medicus, which is up, it will be a feature in the fund. It's a great stock, but it won't be our largest position. But what we're trying to find is those really small companies, founder-led, have a long-term objective, and companies are probably right in our sweet spot of Wilson Asset Management, which is undiscovered, got great catalysts. So my company is a company called Paragon Care. The ticker is PGC. The two founders and I think one other party owns about 70%, 70, of the shares on issue. These guys founded a business called CH2, which is the 4th largest pharmacy distributor in Australia, and it had 0% market share about 7 or 8 years ago, and today it's got about 10%. So these guys did a backdoor listing of a company called Paragon Care. Now the ticker is called PGC, despite CH2 being the dominant business. They did that around November last year, or November 2023. And effectively, they are a huge beneficiary of Sigma and Chemist Warehouse. And the reason is because there will be some leakage from Sigma for the independent pharmacies because they don't want Sigma to have their data, which is obviously now going to be shared with Chemist Warehouse. Well, not shared, but there's a conflict of interest, let's call it, with Chemist Warehouse. So we do think that Sigma will lose some independent pharmacies, and they potentially can go to Paragon, which is, or CH2, which is marketing itself as the distributor for the independents. They also bought Paragon, which is a medical device business. They've got a hospital distribution business. They can put those medical device products into that distribution business. That we think that'll generate tremendous synergy. So the stock's done very well. We actually think this could double from here. And we own about 5.5-6% of the company. We went substantial in the company, I think, in January. So yeah, we're very positive on the company. I think it's a great play on what's happening in that industry, which has obviously been changed a lot through the Sigma and Chemist Warehouse merger. So long answer, sorry.
Yep. I'll stick to my to us TUA. You obviously talked about the success they've had in Singapore over the last 4 years, winning market share and continue to disrupt the market. I guess what's probably happened over the last probably even 6 months is being new developments that's adding to additional growth drivers to the business. They've launched a new product that's targeting the global market, not just the Singaporean market. Both Oscar and I, have used it, actually road tested it, so to speak. It works really, really well. It's an eSIM product that effectively reduces the cost of roaming when you travel overseas. You can download this SIM called the Goose eSIM card in the App Store, and effectively, and rather than paying, your telco provider $10 per day for global roaming, the cost of downloads, et cetera, is going to be a lot lower for this, and it saves a lot of cost. But that's a brand new market, it's a brand new growth driver for this business, and the team there continues to execute and innovate. And also, there's been some developments on the opportunity around free trade zones between Malaysia and Singapore over the last couple of months, and so we believe the total addressable market for TUA has expanded. Obviously, the share price has done really well based on the execution of the mobile penetration. They've launched a fiber broadband product, but they continue to look at new growth drivers and new total addressable markets to grow their business for the longer term. So it's again, high quality business. We really like it.
Fantastic. Thanks, Oscar and Tobias. That actually wraps up the Q&A section. So I'll pass back to you both for any closing remarks.
Well, look, thank you so much for your time and your interest. Feel free to obviously reach out to anyone within our organization, visit our website, and we're happy to answer any questions on this new fund. And I really appreciate your support and your interest in the WAM Founders Fund. Thank you.